What is going on, everybody? Welcome back to another video. This one is going to be over UTG Reaves Utility Income Fund. You guys know we love income, so with that being said, let's go ahead and jump into this video.
I've been getting dirty money.
Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. Okay, before we get too far into this one, I do just want to say I am sorry about my voice. I'm still technically sick, quotes unquote. But with that being said, we're going to jump into this one and kind of see where we feel on this one and my kind of overview of this stock. And again, this is a really good stock actually. I think a lot of you guys are going to actually like this one. This is something that I have slowly started diversifying my money into when it comes down into utilities. We've talked about utilities before. I do like utilities because they provide great dividends. Even in normal stocks, the only problem is they usually are quarterly. So the first thing I want to go ahead and do is we're going to go over here to the Nasdaq's website, and you guys can see this is a monthly dividend paying stock. You guys can see it every single time here on the month. It's 18 cents, and then now here we're up to 19 cents, which is an even better boost. So the other thing that I like to really look at on these is, when it comes down to it, is the max. You guys can see it's had a consistent overall growth period where it's continually to grow over and over and over, which is a huge thing for me. You guys can see it recovered from 08, it's recovering from 2020. Those are good signs to me, and they're not cutting their dividend. So those are huge factors. Now let's go into holdings, and these are things that I've actually held before. I know a lot of these companies actually. So BCE, NextEra Energy, Verizon Communications, everybody knows Verizon Wireless, Fortis, TELUS, American Waterworks, which is a great company. They pay a good dividend too. If you ever used water in the Midwest, you probably have American Waterworks, WG Energy Group, and so on and so forth. And there are others, but this is a really good one. Utilities, again, are going to make up the majority of this one, 63.52%. You are going to have some real estate in here too, which I really like. Communications, when it comes down to the Verizon Wireless and stuff like that. And then industrial. So this one's going to have a little bit of both. Obviously, they're going to be negative on cash because they are using leverage on these. You guys got to remember that. Again, you guys can come over here and kind of do whatever you want with this as well. Just another way of looking at it. I personally would rather use Seeking Alpha myself because I just like them better. I think their data is better. They have better analysis and stuff like that. You get better news on it. That's just me personally. Now, I want to go into this because this is a closed-end fund. So again, the NAV is where that price actually is, or what the asset is worth. If we sold everything tomorrow, they shut the thing down, and this is the price that you would get out of it. So right now we're at about 36 or under 36 bucks for the actual stock, and you're probably trading at about 34.5, 35 for actual. So you're really not that far off compared to others. It's not trading at a huge premium, which is a really good thing, and you're possibly going to be able to get this one. I don't think you're ever going to get this one on a huge discount, but as you guys can see, it stays pretty close within where it's supposed to be. And let's go with since inception, because I think this is a big one for me. See, when it first started, you would have been able to get it at a discount, which is really good, meaning you're buying something when the actual price of those assets is actually higher. And now you can see it stays pretty close, and that's something I actually do like about UTGs. You're not paying something that's extremely up here when the actual NAV price is down here. PTY, you do have that in case. You do have that case. UTG, you do not have that. I like UTG quite a bit. Now, one thing that we always do is the portfolio visualizer. You guys know the rules. We're here for the income. So we have PTY, QILG, and UTG. Why do I put PTY on here? Just because it it's outperformed the market just barely. So I think that's a good place to show where the actual S&P 500 market is, rather than putting SPY on here. QYLD, because everybody wants to compare every monthly dividend stock to QYLD, so I figured why not. And then UTG, because that's the one we're covering today. If you guys don't know what our settings are, here we are. We start with $1,000. We put in $500 every single month like a car payment would be, and that's how we do this. So the 100%. PTY, as you can see, is in the blue, QYLD in the red, and UTG in the orange. So you're going to see that QYLD and UTG are going to stay pretty good. Now, QYLD is newer. So, again, I like all three of these funds for the most part. The other one, so what we can do is to see this further, is we're going to get rid of QYLD now, just because it's too new. And that's the only reason I'm going to do this. Is we're going ahead and put this in, and this is exactly how I expect you guys to do yours, and then analyze the portfolio and see if it shows. So yeah, now you can see it from 2010, and you can see SPY is just barely beating PTY from 2010. I mean, just literally barely by $3,000. No, actually, it's a little bit more than that. I'm sorry. But still, you get my point. You see how close it is, and then you have UTG, which is a little bit under it. But when it comes down to income, which is the main thing that a lot of people are going to care about here, is your income is dramatically better, almost 4 times better here than what your regular SPY would be. And I think that's a big factor, because we're looking for that portfolio income over time. Again, nothing's going to touch PTY in this case scenario, just because PTY is going to pay that bigger and better dividend and give you more compounding, because it's a little bit of a lower price than UTG. UTG sitting at about, what was it right now? At $35.63. Still a great premium. You're getting about a 6.40% return on your money for the dividend, not including, I believe that this one will continue to go up. Even though in 2020 everything dropped thanks to COVID, this is one that even when things do get a little bit rough, it's going to stay contained. Everybody needs communications, everybody needs water, everybody needs those energy factors. So with that being said, this is this stock. I think it's a great one. I encourage everybody to go out, do your own due diligence, make sure you know what you're investing in, understand what you're investing in, and feel comfortable. So that way when it dips, you're not crying to somebody or worried about everything. Make sure you feel comfortable. And again, when I buy these stocks, I'm willing to have cash ready for when it does go lower, like PTY is right now, is I'm buying more. Like I said before, I was waiting on that month, but when PTY had this huge dip, I've been buying it up. The worst case scenario is they do another dividend cut, and then I do sell it and I take a small loss. Worst case scenario is we get that regular normal dividend like we did last month. That wasn't quite as much, but it's still a good percentage. And then I keep that dividend snowball going. So with that being said, guys, thank you guys for watching this video, and I look forward to seeing you guys in the next